Sellers are actually less motivated than the sell-off of 2022. The trend is fascinating to me. So we're seeing a big increase in sellers offering creative financing. More properties are being listed vacant a little bit. The challenge with a lot of this data is, I am one of those, so I'm allowed to say that we're not exceptionally good at putting data into stuff properly. Even putting in that a house is brand new seems to be too much of a task for some of us. And on the same token, slightly fewer, not much fewer, properties are being listed tenanted. But this part fascinates me looking at power of sales because... Hi everyone, thanks for having me. I'm just going to go through a couple slides. Quick thing about myself, I'm host of Canada's #1 real estate podcast, which is called The Canadian Real Estate Investor. Being in touch with my audience really helps me to get an understanding for what the needs are of the real estate market, especially investors. Small cap, obviously, not commercial stuff. Today I'm just going to talk about and show you a couple of charts. The idea here is reading between the lines, but looking for indicators of distress in the supply side of real estate on the Toronto Real Estate Board. We basically built a dashboard that uses the back-end data of the Toronto Real Estate Board through a system called VOW, a virtual office website. And we looked for things like sellers looking for fast closings, sellers who claim to be motivated, power of sales, vendor take-back mortgages, which was a big trend in the 1990s, properties that are being sold vacant versus tenanted, and the instances and occurrence of those to see whether or not sellers are kind of feeling it right now. So to start off, sellers are actually less motivated than the sell-off of 2022 coming out of, so that you can see the peak there, that would be May of 2022. So it was about 3 months after house prices fell off a cliff. It does seem to be increasing. We are starting to see more and more sellers claiming to be motivated, but by no means is it comparable to last year. Inventory is beginning to pile up. I think John's going to do a lot more on this, so I might just leave this one. We're up 30% year over year, 39% year over year. Treb stats came out yesterday on new listings and 40% or 41% year over year on active listings. The idea that supply scarcity was kind of flooring the market or allowing prices to stay stable could be behind us a little bit. This is the one that fascinated me a lot, and we kind of start getting into these really interesting graphs. So in a sheer volume, none of these numbers are really meaningful. When you're looking at this or power of sales, it's like below 100 listings, which is less than 1% of the total supply of the listings coming onto the Toronto Real Estate Board. But the trend is fascinating to me. So we're seeing a big increase in sellers offering creative financing, vendor take-back mortgages. So this is an instance of vendor take-back mortgages being advertised within a listing on the Toronto Real Estate Board. More properties are being listed vacant than at the peak in 2020. When I show you my next slide, this could contextualize, this could be a statement about the landlord and tenant board. This could be speculation. I scanned this a little bit to see if a lot of it was coming from new supply. So we're getting a lot of finished speculative investments like pre-constructions that Jordan might be talking about later, and they're selling them immediately rather than renting them out. And that does seem to go with it a little bit. The challenge with a lot of this data is the line of defense that really inputs the data properly is a realtor. I am one of those, so I'm allowed to say that we're not exceptionally good at putting data into stuff properly. Even putting in that a house is brand new seems to be too much of a task for some of us. And so it's tough to know if that's really where the supply is coming from. But nonetheless, more properties are being listed vacant than at the peak of 2022. On the same token, slightly fewer, not much fewer, properties are being listed tenanted than at the peak of 2022. We are hearing a lot about, the rental market's doing exceptionally well. So in a lot of cases, landlords are choosing to hold on. It's also incredibly difficult to list a property tenanted, sell it, and market it properly. And this is the big one from my perspective. This is the trend that, for those of you who follow Ben Rabidoux's analysis, myself and Peter, who's in the room here, contribute this data to him. And this is monthly Treb listings, including power of sale or mortgage in the seller name. There are probably significantly better ways to get a more complete data set, but just in the interest of actually being able to do this quickly and efficiently, that's how I do it. And it's up quite significantly on a year-on-year basis. It's in the 300% to 400% range, which sounds astronomical, but it's still less than 100 total listings, which is less than 1% of the supply on a monthly basis on the Toronto Real Estate Board. And so I have had some lenders reach out to me and say when I publish this data that it's probably not accounting for a lot of the power sales, and that they would estimate that it's probably about a representation of about 10% of the market, because again, the realtor thing. And so a lot of realtors aren't actually putting the power of sale thing, or there's the soft power of sales. But this part fascinates me, looking at power of sales, because in a lot of cases we look at delinquency data. We want to see, and we know mortgage delinquencies are exceptionally low. And this kind of almost, from my perspective, is a bit of a leading indicator on it, because I think mortgage delinquency data is 90 days delinquent. And then I think when CBA reports it, it's been another month, so you're 120 days. And I think by the time CMHC reports it, it's in a quarterly report, so now you're 6 months. And so the property is likely already either gone power of sale, or let's call it soft power of sale. It's sold, and it's already a data point on the real estate board long before it shows up in the delinquency side of things. The big takeaway for me is that we are starting to see signs of distress among sellers in the Toronto real estate market, and that more properties are starting to sell power of sale and offer seller financing. How this compares to the kind of 1990s thing, I would say I was born in 1991, so I can't really offer any good comparison there, but I would leave it to all of you. Be curious to have conversations with you later on today to get an understanding for whether or not I'm looking for the right things, and whether or not we are kind of running into a comparable situation. Now you guys get to listen to somebody far smarter than me.